Well, everyone, the time has come. We are going to talk about GameStop because I'm not sure you paid attention, but GameStop stock has gone from a staggering $4 as of a few months ago, a staggering $18 as of a few weeks ago, to over $300. In fact, it has been spiking over the last week, thousands of percentage points over where it used to be. And there has been a lot of people just noticing, why the hell is GameStop stock going so crazy high? In fact, here's a quick look at it. Just take a look at this. Take a look at this. It is right now at $343.20. It actually already changed by $10 since I hit record a few seconds ago. And you can see this. Here's the 1 day movement. Looks kind of stagnant. But look at the 5 days. Look at this. Massive spike here, but it was spiking before that. This was considered a spike. It's continuing to spike. And we're going to talk about what's happening with GameStop, because obviously you assume they must have had a major announcement, right? Or they must have had a major financial gain to even talk about it. But reality is that's not actually what's happening. In fact, it's kind of funny, as it's essentially potentially Elon Musk along with American people on Reddit trying to screw over hedge funds, because they're kind of pissed off that hedge funds were bailed out for their horrible investments during the pandemic. So we're going to get into that, but before we do, I got to remind you, we are giving away a PlayStation 5, an Xbox Series X, and a Nintendo Switch this month, and this month is almost at an end. We got like 3-4 days left, so still time to enter. Head down to the description or to the pinned comment to find out how to enter. I'll be announcing the winner during a live stream at the end of the month. You're going to want to tune into that. I will get that stream set up and announced here probably in the coming days, so people can kind of queue it up and get notified for when it's going to go live. Otherwise, you can hit that bell icon, and you too can be notified when that live stream goes live, along with any other content we do, including this really interesting GameStop story. So let's get into what's happening with GameStop. So to understand this, we need to understand why the price is spiking, and that is because the stock is being shorted. So shorting the stock, as it says here, or short selling, is when an investor borrows shares and immediately sells them, hoping he or she could scoop them back up later at a lower price, return them to the lender, and pocket the difference. But it's much riskier than buying stocks, or what is known as taking a long position. So in short, what's happening, ironically there, in short, is that there are hedge funds out there that will borrow stock from lenders. So they will borrow thousands and thousands of stock and then immediately sell that stock at cost, right? So say that they buy 2,000 shares of GameStop at $18 a pop, and they immediately sell them. The hope is, obviously, that when they go to buy that stock back, because they got to pay back the lender eventually. They got to give the stocks back. They borrowed the stock. They do not own the stocks. So they can't even just take the money they got from selling those stocks and just hand them that money. That's not how it works. They actually have to give the shares back. They're just borrowing them. Oftentimes, it's kind of like getting a loan from a bank or anywhere else. The idea is temporary cash influx, temporary value influx, temporary holding. That's the benefit of lenders lending out the stock is hey, interest, all that jazz, because there's an interest paid on it. So it's just like a loan from a bank. They have to pay interest on that stock anyway. So it's literally a loan. But the idea of this whole short selling is a really rich person or typically hedge funds will borrow all these shares, sell them, thinking the stock's going to go down, and then buy back in at $4. So say they're doing this at $18, they think it's going to dip back down to $4 or whatever. They could buy back in at $4, keep that $14 difference, and that will cover them. And it will also more than cover the percentage of they have to pay back in addition to the original stock loan. So what happened is Elon Musk and others, including a massive community on Reddit, decided that they have had enough of this bullcrap. Essentially, these hedge funds went bankrupt over the last year. Almost every single one of them went bankrupt. But not talked about enough in all of these bailouts where the American people were given, a couple $1,000, earlier in 2020, and then we got our $600 or whatever, more if you have kids, at the end of 2020, beginning of 2021. I think it was more so the first couple weeks here of January when we actually got that money. Hidden in the trillions of dollars they were giving away were bailouts for a ton of companies, including hedge funds. Hedge funds that did this kind of stuff and went bankrupt. So basically, Elon Musk, along with the American people, got sick of this and said, you know what? If you're going to suck that bad and go bankrupt and get bailed out by the government, aka bailed out by taxpayer dollars, we want that money for ourselves. So here's what we're going to do. As you're short selling the stock, so you bought all the stock and you immediately sold it on the marketplace, we're going to hold. We're not going to sell it back to you. Because see, how the stock market ebbs and flows is when demand for a stock is greater than the amount of stock available, the stock price goes up. This is just basic supply and demand. Example, why our PlayStation 5 is still able to be sold for $800 to $1,000, sometimes $1,500 on eBay. Same with the Series X and Series S and all that. Well, because the demand is much greater than the supply, and that can happen with the stocks. And supposedly, the stocks have been shorted upwards of 120 or more percent, aka more stock has been quote-unquote sold than is actually available to purchase. There's part of this that might actually be a little bit illegal, but this isn't on the people that are holding. So what happened is Elon Musk and others bought all these GameStop stocks from these short sellers, and they're refusing to sell them. And when they're refusing to sell them, it leads to this high demand because all these short sellers have to buy back the stock eventually because they got to give it back to the lenders. They can't hold on to the stock forever. They sold it, but they need to get it back. So the hope is you do this holding pattern where the stock prices spike so much that these hedge funds and other investors have to rebuy the stock at a significantly higher volume, basically bankrupting their company, but also to the massive profits of the American people that held out. And they're going to keep holding out. So the reason the price is going up is because people aren't selling. The hedge funds need to buy the stock back. There's high demand, but they can't, or they're refusing to because the stock price is so much higher than what they sold it for. They don't want to lose money. They don't want to lose millions and millions of dollars. And they're holding out because they think it's going to crash. They think it's going to crash. As long as they continue to short sell, or as long as the American people and Elon Musk, who bought up a bunch of shares, don't sell the stock, the value is just going to keep going up and up and up. There's nothing stopping it from going higher. And that in that of itself isn't illegal. It just isn't the typical reaction of the marketplace. Now, the marketplace has done this before where they fought back against hedge funds, just never to this degree. This is one of the most significant degrees of fighting back that's ever happened that could literally push these hedge funds out of business. So let's look at this article here that has more detail about it. Out on CNET. It says Reddit and Elon Musk sparked a GameStop surge. Why AMC and BlackBerry are next. So other companies are also being affected by this, but GameStop has seen the most significant because their stock was so cheap at the time that they were selling it, short selling it. So GameStop isn't just a store that sells video games. It's also one of the biggest bets Wall Street traders have made lately, with nearly all of them expecting it to fail. Right, especially after the last financial report, they're down in revenue year over year, down in profits year over year, losing money, year over year. There is a little bit of surge with them in terms of hope because some new members on the board have some massive experience at turning around companies and making online e-commerce a thing. So GameStop might not be dead in the water anyways. GameStop already had some hope, and the stock price adjusted accordingly with, hey, look, there is some hope for GameStop. But obviously, most people see, even with that hope, how is GameStop going to recover? That wasn't until Monday morning, when a bunch of Reddit users decided to play the market and push GameStop stock up to nearly 3 times its average over the past several months. Then they started spreading their strategy to struggling movie chain AMC and once popular smartphone maker BlackBerry too. It all started last week when posters on the Reddit stock trading chat community Wall Street Bets attempted to push up shares in the struggling game retailer. With much of Wall Street betting against GameStop's success, Wall Street Bets investors believed they could force a market rally by creating demand where there had been little before. The result? GameStop jumped more than 822% from $17.25 at the beginning of the year to a high of $159.18 on Monday. It's actually higher right now. I just showed you guys that. Then it dropped by nearly half, only to rise back up to $147.98 Tuesday. And then Tesla CEO Elon Musk tweeted about it, and the price jumped 40% in after-hours trading. On Wednesday morning, it hit new highs, covering around $315 per share. It's even higher now. We'll take a look at it before the video is over as well. The Reddit community has also turned its eyes on BlackBerry, attempting to pull the same trick. So far, they've pushed shares up more than double from $6.58 to where they were at the beginning of the year. On Tuesday, the stock closed at $18.92. On Wednesday, it's hovering around $22. There was also AMC. Reddit targeted that one, spawning the hashtag SaveAMC on Twitter, too. Its stock jumped from $2 per share last week to $14 Wednesday morning. Here's what to understand about this. So how did it happen? Effectively, Wall Street Bets crowd created artificial demand for GameStop and BlackBerry shares. This isn't illegal, by the way. I know it sounds illegal. It's not. There are 2.2 million members of Wall Street Bets community, though it's nearly impossible to determine how many people are involved in the GameStop and BlackBerry schemes. What happens is that by buying a lot of GameStop shares quickly, the price rises. That's normal. With GameStop, though, there are also a lot of short sellers. This is what's happening here. Or people who effectively bet the stock will drop rather than rise. But here's the hitch. If GameStop rises too much too quickly, short sellers, the people betting on GameStop struggles, are forced to buy even more stock to cover their losses. That pushes the stock up even more. And that's how we suddenly see GameStop's value jump. Then we go into short selling here. We talked about what short sellers do. So here's an example. Imagine Ian Corp is a public company and its shares are worth $10. A short would borrow shares of Ian Corp and sell them for $10. Their bet is that Ian Corp stock will actually drop below that, maybe to $4. If it does, then they could buy the shares at $4 and pocket the other $6. If Ian Corp stock drops to $25, then the lender who made this bet possibly may push the short to cover their bet. The short effectively has to buy the shares at the new higher price. When a short is right, betting against the company, they can make a lot of money. But if they're wrong, they can lose a lot more money too. Yeah. So, how much money did the GameStop shorts lose? The losses appear to be tremendous. So as of Monday, shorts seem to have lost $3.3 billion betting against GameStop this year, according to Market Insider. About $1.6 billion, or about half of those losses, happened on Friday when the stock jumped just 51%. It's also worth noting that GameStop began the year as one of the most shorted companies on the market. So will these wild swings continue forever? Obviously not. Part of what's driven this behavior is the popularity of retail investing, or what traders who aren't Wall Street professionals buy and sell stocks. Stock trading apps, often with no fees, have made it easy for people to jump into the market, and the social media has helped people rally together, egging on one another to buy more and more of a stock. GameStop rally is one in a series of eye-catching market moves to stir concerns among fund managers, some of which who say trading by individual investors is pushing stock prices out of whack with fundamentals. What do the companies think of all this? GameStop didn't respond because they're kind of the innocent bystander in all this. Their stock is being targeted, but it's also not their fault per se that they're being targeted. BlackBerry executives told MarketWatch it was not aware of any reason for the recent trading activity because there hasn't been anything happening at GameStop or BlackBerry to cause the increases, or AMC. Why are Redditors doing this? There's the seeming easy money aspect. Of course, they can make a lot of money, which is compelling in and of itself if you're comfortable with risk. But some of them are also framing this as a crusade against Wall Street. We're in a war, one Redditor posted Wednesday, a war for redistribution of wealth. So then why did Elon Musk get involved? One of the richest people in the world. Aside from being a prolific Twitter user, Musk has also recently learned he can drive people to various companies' stocks. He tweeted about how much he enjoyed buying something for his dog off Etsy, and the stock jumped. Now he tweeted about GameStop, and that stock jumped even further. Should I get into the frenzy? It's always smart to obviously consult a financial professional before you get involved in something like this. Short stocks are very volatile and very risky, and getting involved is just, not something I would suggest most people do, but I'm not a financial advisor. I find this whole situation to be hilarious. We're going to take one more look at GameStop stock here before we go, because this is just, I'm kicking myself, and I'll show you why I'm kicking myself. So there was a time last year I was going to put $1,000 in the GameStop stock because while GameStop was sinking, I had a feeling that they were going to be able to bounce back over the next couple of years and at least become respectable. I was hoping to get, around $20 a share or something like that, right? So if you look at this, I was looking at investing way back Oh, let's see here. We need to go to 6 months. Way back here in August, all right? We see 487. Where's the exact? So right here, between these two numbers, there was a shift. It's at 539 to 668. Somewhere in there, there was a price for 632. And I was going to put $1,000 in. If I had cashed out when it was $148 a share yesterday, if I cashed out my shares, I would have made $23,000 or $22,000 in profit. If I cashed out today, you might as well just double that to over $40,000 in profit. Yeah, needless to say, I could have made it big. Now, obviously, I didn't know this short was going to happen. But, I mean, you can just look at this. I was hoping to, who knows if I would have held on to my stock, too, because I was going to sell it around, right around here. I was hoping to resell it for about $20 a share if I had spent it, which still would have been a hefty profit margin. But it would not have been, this. The reason it jumped up even to this price is just belief in the new management of the company is going to do something right. So, this was normal. It took a little bit to get here, but it stayed there, and that's a normal increase. This is just not. It jumped here on the 13th, 14th, 15th, 21st, 25th, 26th. Now we're at the 27th. We have no idea what it's going to close at today. It could close at over 340. It seems to be bouncing back between 330 and 340 today. We'll see if it jumps even more tomorrow. But GameStop is kind of this whole situation is funny. The American people are just sticking it to hedge funds, short sellers that are high risk, high reward kind of people. Also high risk, high risk. So I love it. It's great. I'm glad we're able to talk about it a little bit. We don't get to talk about this kind of stuff very often. But GameStop, what this means for GameStop, the company, pretty much nothing. GameStop doesn't get this money. What GameStop is able to do when the value of their shares go up, unless they're selling their own shares, which they can sell their own shares because every company owns shares of themselves, of course. So GameStop could sell their own shares. But I think what's interesting here is that GameStop can use the value of the shares to get loans. Now, most loan companies are going to see what's happening and realize we're not going to give you a loan based on the value of your shares, which increases the value of your company to I think they're $8 billion, $9 billion company now. It's crazy how much the value's gone up. They've gone up $4 to $6 billion in value over this. I think GameStop was going to be okay anyways. GameStop, by the way, is closing a third of their stores, something like 1,000 stores or whatever, and closing them, I think, by the end of this month, actually. And they're doing this because they're getting away from retail, and they're going to be focusing on online, but they are going to keep select retail locations that obviously, one, are performing really well, are in ideal locations, and seem to be separated from a mall. So the ones that you see in malls, I don't know if the Mall of America one, but a lot of the ones in malls are going to go away, whereas a lot of the ones that are standalone stores are going to have a chance because they can transform that store into whatever they view the future as. So I think this is highly interesting, highly entertaining to watch from the outside. Heck, if you were involved in this and one of those people that bought a stock when it was cheaper and you're just holding right now and refusing to sell, that's great. You must be laughing your way, knowing you have a huge payday coming because these short stock people have to buy the stock back. It's great. I love it. All right, folks, I'm Nintendo Robojets from Nintendo Prime. Thanks for tuning in. This was GameStop stock going insane in 2021. Catch you guys in the next video.